Well, thank you so much. Now, perhaps I'd like to use the next 4 minutes to walk you through three key pieces of information. Now, first is about the capital. The second is about why we're here. And third is about the next steps for the audience who might be interested to explore those opportunities. Now, let's start with the numbers. Now, first of all, I just want to use three set of numbers to put the following discussion in perspective. Now, first, I think for those of you who have been following the media, you probably would have come across some media coverage saying that, okay, Hong Kong was the number one IPO market in the year 2025, last year. In fact, last year, the whole stock market and the Hong Kong Stock Exchange raised $37 billion US dollar. And that puts Hong Kong as the number one spot when it comes to equity IPOs fundraising. Now, and interestingly, you really drill down on the different sectors that successfully raised money in Hong Kong. You would notice, actually, the new energy space is one of the top three that successfully attracted quite a lot of attention and therefore the capital. So this is one number, equity. Now, the second interesting number is about wealth management. In fact, there was a study by Boston Consulting Group, and there was about a month ago, there was being published. If in fact, based on this study, Hong Kong is now also rose to the number one spot as the number one largest cross-border wealth management booking center. Now, at the moment, Hong Kong manage 4.5 trillion US dollar of private capital, the AUM. Now, what does that mean? What that means is that we have quite a lot of high net worths, the family offices that have set up their own presence in Hong Kong. They have parked the money in Hong Kong to be deployed. So, of course, some of them were invested into the stock market, but there's also a big chunk of the capital they are waiting for opportunities in something arguably that will be more steady in return with less volatility. Now, what could that be? Actually, that was something that has been repeatedly told to us by the investors. They're looking for, ideally, some kind of new infrastructure investment. They can provide them anywhere between, say, 8 to 12% per annum of steady return. Now, the duration, they're not in a hurry. They're happy to put the money there for like 10 years, 15, 20 years, but they want that steady, reasonably modest return, 8, 12%. So that's why we are very keen to introduce different new energy transition related projects to the family offices and private capital in Hong Kong to be deployed. Now, there's a second bit, private capital. Now, the third bit is about green financing. Now, in case you're not aware, Hong Kong actually accounted for almost 40-50% of all the green loans and green bonds issued for the entire Asia Pacific. Now, so put aside the motherland of Hong Kong, mainland China, actually Hong Kong is the largest place for issuing the green loans and green bonds. Now, what does that mean? What it means is that attract quite a lot of, particularly the mainland Chinese energy transition kind of projects to raise through the debt fixed income kind of setup to raise the capital for the international expansion. Now, so there are some numbers to put in perspective about there are just a lot of financial dry powder that put behind all these energy-related projects. So this is the first bit. Now, the second part is about why we're here. In fact, we've been very grateful that we have got like 20, 30 or so delegates coming along with Invest Hong Kong to visit UK these past 2 weeks. And now why they're here are very simple, twofold. Number one, I think later on at the panel, you probably hear more from our delegates. There are some highly capable mainland Chinese and Hong Kong energy-related firms. They're looking for market partnerships or even like direct market access. So we would like to basically come together to essentially try to explore some partnerships with the public sector, like governments, accelerators, the asset managers, or even the end users. So that's why I think for those of you in the audience, if you are open to partner with the highly capable mainland firms in the energy sector, so come join us and maybe exchange cards at the end of the session. So, and the other side of it is that we also have some investors who come along with us. they're here to invest. So they're here to invest into early stage to growth stage, again, energy-related startups. So in case you're looking for investments and potentially expansion to Asia, also come to us. We would like to connect you with the investors in our delegation. So this is the second bit why we're here. Now, the third and final bit is about the next steps, because this is really just the first step. So what we'd like to do is to really establish the bridges so that we are able to, again, for every 10, 20 companies you meet today, there are 100 times more companies coming our way. And there are also a lot more investors that are interested about investing into highly capable tech startups in Europe. So that's why the thing for those of you who would like to maintain that relationship, again, come to us. We'd like to exchange costs with you so that we can follow up after we go back home. Now, so with that, I'll just leave it to our highly capable colleagues and also our esteemed panel to share something more concrete with you so they can get a better sense about what are the different kind of projects that we're looking for, like partnerships and collaboration in UK and the broader Europe. Thank you so much.
Thank you very much, King Leung. That's fantastic to get some insight there. I'd now like to welcome to the stage for this panel Olivia Tu, SVP from InvestHK, Jason Cheng, CEO of Kerogen-CX Capital, Michelle Cross from Really Easy, Lawrence Nicholas Bennett from World First, a payment provider, and also Zoe Zhang from Green Seed to talk us through this next session. If you'd like to sit in the order, you should of your photo. That was how it's brilliant. Yeah, thank you very much, ladies and gentlemen. I'd like to pass you over now to Olivia.
Oh, that's it.
Okay. Good afternoon. Can you hear me? Okay. Okay. It's our first time, at least my first time, to host a panel that with everyone has on. So it's a pretty interesting experience. And I just hope you enjoy the following 45 minutes with our speakers and sharing their experience and insight with us. So good afternoon, everyone again. I'm Olivia Tu from InvestHK. I'm covering the sectors of sustainability, particularly for the green technologies and innovations. And InvestHK is a government department that we're focusing on attracting overseas direct investments to Hong Kong. And our headquarters is Hong Kong as well. So in the last 2 weeks, we actually are leading a new energy and sustainability delegations from Hong Kong and mainland Chinese. Today, they're also with us in the floor as well. The delegation represents the full breadth of Hong Kong's new energy and green tech ecosystems, bring together about 25 companies. They spread it across listed, pre-listed, and startup businesses alongside active investors. As Hong Kong and UK both accelerate towards net zero, the biggest hurdles that we see isn't just inventing the technologies, is also scaling it globally. That requires two things. First, a robust cross-border supply chain. And secondly is the capital deployment. Today, we are exploring how Hong Kong serves as an ultimate bilateral launchpad and financial superconnector between the UK and China booming green tech sectors. We have very incredible panels spanning private equities, energy storage, digital finance, as well as electric vehicles. Please welcome Jason Zhang from Kerogen Capitals, Michelle Cross from Really Easy, Lawrence Bennett from World First, and also Zoe Zhang from Green Seed. So let's start with the financial backwork. Kerogen's, Jason, I would like to start with you first.
Sure.
Because your Kerogen-CX bridge both economies with headquarters in both Hong Kong and UK. And we understand that from your perspective would be really on a very important investor lenses. So how does these dual hub strategies help you mobilize international capital for deploying capital into major net zero projects?
Sure. Thanks, Olivia. So by way of background, we're a private equity fund manager. We've been going for about 15, 20 years. Offices, Hong Kong, London, San Fran, New York, manage about cumulative $3 billion US under management. So we focus on energy and energy transition specifically. In terms of having both the Hong Kong and UK access, it's very helpful because obviously UK, Europe has been involved in energy transition for almost 2 decades. So the ecosystem, the technology, the regulation, the community and the thinking is very advanced here in terms of energy transition, and much more so than in Asia, where it's starting to grow and develop. And then on the other hand, once Asia tends to decide to do something, things happen very quickly and it scales very fast. So having those two perspectives, and for example, taking ideas and business models from Europe, implementing them in Asia, has been very productive and fruitful. And then now similarly, we're seeing that ability to think about how to execute quickly and rapidly. That comes from China, Hong Kong, GBA, and bringing that mentality back to UK, Europe. I think as we saw yesterday with Octopus announcing a partnership with CATL on battery swapping, taking a business model that's been developed in China, and they're bringing that here as also. So it's now starting to move in the other direction as well. So having both of those axes has been quite fruitful for us.
Mm-hmm. Okay, so Jason basically highlight about the capital flows into these massive projects, but deploying this capital is also about scaling the technologies. And Michelle, because you're overseeing the rural markets in Really Easy, so can you share with us, since Really Easy also scaling your technology as well as the project deployment and rural markets, what are the primary commercial and technical bottlenecks that you are currently seeing in UK's energy storage market, and how Really Easy is trying to tackle it?
Yeah, thank you very much, Olivia, and very nice to meet you all. I am Michelle Cross. I am the director of Easy for all of Europe. So I'm based in France. And just a little bit background of Easy. So Easy is a developer, investor, and also a manufacturer of battery equipment based in China and also going to IPO in Hong Kong. And this is actually quite very important for us that we're going to IPO in Hong Kong because we're raising capital, as mentioned, for most of our projects. So in terms of the bottleneck, what is important to understand is that Easy, we are not only just a typical manufacturing company, but we are an end-to-end provision solution. So we are involved from the very beginning of the project right until the very end in the negotiation of the PPA and then the integrations that we're involved in. If we look into the bottlenecks, I would divide them into 2 aspects. First aspects into internally in terms of maybe the hardware that we have, and externally in terms of the relegations that we have to manage and tackle. I wouldn't take it as only the UK, but it's mainly as well as Europe, what we have to manage in terms of Europe and how we have to adopt our solution as we deploy in Europe. So if we look at maybe the hardware if we look at our EMS, that we have a very innovative EMS with an AI solution, and we had big challenges to be able to deploy this EMS in Europe and also in the UK, mainly because of cybersecurities and all of the regulations in place. And for us, especially working in sectors like data centers, we have to be very optimal. And how we tackled that is by partnering with local EMSs. And not only that, but our objective as well is to use this knowledge and innovation that we have created in Hong Kong to be able to transfer it and transmit it as well with local partners in Europe, and especially in the UK. And another aspect was in terms of the battery, Europe were moving towards this battery passport. And this, we have to be ready for the battery passport if we want to deploy large projects in the European Union and in the UK as well. And for that, we are planning to bring a manufacturing plant in Europe. Now we're looking into Poland. And this is why going into IPO as well will give us that ability, that capital to accelerate this production line that is coming into Europe and to be able to be aligned to meet these bottlenecks when it comes to preparation of this battery passport. And after, if we look at UK as maybe some specific bottlenecks that we had in UK, especially with projects, was the timeline that we see into the integration of the grid. And this has been quite a challenge for us because we want to accelerate. We have the pipeline and we have the project, but we can see a timeline of integration on the grid becoming longer and longer. And the challenge for us is to be able to partner with the right local partners and have the right lobbying as well to make sure that these projects are optimized to the level where as we come into the complementary of the grids, it'll take as less time as possible. So, yeah. And I mean, the objective of Relais today, we have over 13 gigawatt of projects around the world. 80% of those projects are our own assets. So we own these assets ourselves. And our objective after this IPO in Hong Kong is to be able to accelerate more projects in Europe.
Yeah, definitely. I think definitely is not easy pathway that your company just in a short period of time, maybe 5 years, then you can already planning the stage to go IPO and capturing international projects globally. So I would like to bring in a perspective in a more with a platform that we can tackle some of the hurdles for a tech giants like you from World First. Lawrence. So World First is a subsidiary and also that they under the AIM International, and World First is also a financial platform. So I would like to understand, given that you will support the payment and transactions of major Chinese or international new energies and EV giants. So are you helping these leaders ease cross-border payments? Or ease the frictions in a way that do you consider Hong Kong is actually a ideal hub for them to be stationed in?
Thanks, Olivia. Yeah, so it's a good question. Like you said, we do work with a lot of the biggest businesses in China, EV giants, and so forth, and helping connect that treasury center and supply chain across the world. I think a big part that people don't understand is, well, firstly, the scale involved. As everybody here will know, green tech is a capital intensive business. These are very, very large sums of money being moved around. Tens, hundreds of millions sometimes. Hidden fees, FX volatility, all that kind of stuff. 2, 3, 4, 5%. It could very easily wipe out margin and make businesses unviable overnight. So, although the financial infrastructure around green tech is not always the thing that is most commonly talked about, it is super critical. Which is why we are so heavily embedded in that space. Another aspect, which I think is not always part of the conversation, but probably should be, is when money moves abroad, whether it's from the UK to Hong Kong or to mainland China or wherever, almost invariably it's reliant on what's called the correspondent banking network. So the money moves from bank to bank to bank, and it kind of hops its way across the world to get to its final destination. And that process is notoriously long and expensive and unreliable. And I think that is a real problem when it comes to green tech. Payment delays, money go missing, all that kind of stuff is essentially existential in the space. And so where we come in, again, like you said, we have a huge presence in China and Hong Kong, is because we have, we're able to provide a system that could serve people in every country. The money can move instantly, it can move free. And, that is absolutely critical in the green space in a way that it's not necessarily if you're, selling toasters. So that's a really kind of important part of it. And yeah, Hong Kong is critical to that. Whereas a lot of the manufacturing is done on the mainland, Hong Kong is absolutely the kind of treasury center. It's the legal and IP hub. A lot of our kind of relationships are held in Hong Kong. They are able to hold the Hong Kong dollars. They're able to collect the money from all over the world on behalf of the factories. And essentially what would then be a long and painful treasury process of paying the factory in CNY, collecting the money from the US or the UK, and essentially acting that all together. That has been a nightmarish process for a long time. And that is a big part of what we do, is just to make that, a 3-click process as well. So, it is a huge thing for us.
Thank you. I think you mentioned the parts about the IP, and also particularly in you mentioned about the legal system as well. So I think it would be good that Zoe, we can state your comment because obviously you are one of the growing stars in the electric vehicle industries, and your family having manufacturing facilities in China as well. So my question to you is tapping into the manufacturing path that we understand is a game changer for the UK founders like you, right? So how does Green Seed use Hong Kong strong legal or high IP protection systems for scaling your technologies globally?
Thank you so much, Olivia. Great to be here, everyone. Hello, I'm Zoe from Green Seed. So I'm the founder and CEO. We provide customized solutions for electric vehicle charging solutions globally. We started the journey from UK. And now Hong Kong is very important for us for our international hub. I really appreciate Invest Hong Kong's support in the past year. But yeah, back to Olivia's question. That's a very good question. Our team was discussing actually this point when we were starting our solutions back in 4 years ago. We really lacked the Hong Kong in business environment. So we often visit Hong Kong for exhibitions or for the events organized by government. And we found that there would always be legal service or even advice from the government. So we do see Hong Kong as I really like Lawrence's description of the Treasury hub, including the legal service. It has been very helpful for us. We can get very easy access to the legal service that we would be seeking for. It also creates the confidence for our team to expand to wider regions. So it's been very resourceful for the legal service in Hong Kong. Thank you.
This is really good to know. So Jason, I would like to pass it back to you because we have Michelle from Really Easy, and we also have Zoe from their Green Seed. So I understand you actually found a platform called CelebrateX, right? So can you introduce a little bit on CelebrateX? Can they leverage on that on this platform? And for your platform, I understand that you see a lot of cutting edge techs as well. So for clean tech companies with great IP looking into entering the massive Asian markets, how can Hong Kong serve as a testing ground or co-investment hub with you?
Sure. Thanks. So CelebrateX was formed around the time of our commitment to net zero in 2020, and we merged with General Electric's private equity business around the same time to widen our capabilities beyond kind of large infrastructure projects. When you think about energy or net zero and energy, we need a lot more than just solar and wind. It's system-wide transformation. So you're going to need a lot of new technologies, a lot of transformation on different industries, and so on. And so taking that perspective, we started then looking at innovation, how to scale, looking at first-of-a-kind risk, and what would be the quickest way to bring those technologies to market, and how to de-risk them. There's a whole kind of elements to this, but the one key thing for Hong Kong and Asia is, and China is, China has built more stuff, more manufacturing, more infrastructure, more refineries, more chemical plants than anybody else in the last 20 years. And a lot of those skills have been downgraded in the West. And so if you want to build, if you invent something here, and you want to build a pilot plant, demonstration plant, full-scale plant, you need 20, 50, several $100 million. The cheapest, fastest place to do that is through Hong Kong, China, GBA area, because you've got the engineers, you've got the speed, so you can do it probably at half the time and probably at half the cost of trying to replicate that in Western countries. So you could bring your technology, go to the GBA with Hong Kong, develop it, build your pilot plant, figure it out, iterate it, make all your mistakes in a lower cost environment where the engineers kind of know how to fix these things. Once you've figured it out, then you can bring it back to other markets here and so on, and then build your full-scale plant if you want to. So that model, in a sense, in our investment in EcoCeres, which was when we looked at sustainable aviation fuel globally, there are hundreds of project developers out there. We actually picked Hong Kong. We picked the partnership with Town Gas there for this very reason. And we built the second plant actually in Malaysia, literally at half the industry cost average, and it was done in 2 years. Most Western jurisdictions will take more than 5 years to do a similar thing. And some places permitting could just take 7 years alone. So if you want to build something quickly and efficiently, that's the place to do it. So we can see that as kind of the easiest way to de-risk a lot of these newer technologies is to come to Hong Kong and take advantage of the skills, the infrastructure, and so on there.
Yeah. I think you're bringing a very important perspective regarding the technological solution providers when they have mature technologies that are being built. They can deploy in Hong Kong. On the other hand, is more importantly is about the GBA markets, as well as identifying the capital's resources that we can see in Hong Kong pool of investors that we can have them in Hong Kong as well as in London or UK. So I would like to move a little bit beyond the hardware side. Because really easy, you actually provide a full life cycle services for your energy storage system as well. So I would like to understand how does really easy leverage your digital and AI capability to help Europe and Hong Kong asset owners to optimize their revenue streams, because revenue is really important in terms of investors' considerations, right? So how can they optimize their revenues in a volatile energy market as at today?
Yeah, thank you for that. What is important to understand is that, the batteries, our batteries are made for return on investment. And the software side of the battery is very, very important, extremely important. And it depends most of the time, the length and the life cycle of the battery itself, about how it's managed. And with what we have developed is that a software that manages the performance of our batteries, but mainly and most importantly, and this is what we did with the university in Hong Kong, with the professors in Hong Kong, was to develop an AI solution that can help us to optimize maximum the revenue that our batteries are able to produce in terms of the trading side of our battery and in terms of the communication of the data that the battery is receiving and giving at the same time, the input and the output. And this is extremely important, and this is what we have developed and that we have put in place. For Europe, on the other hand, it's a little bit tricky because we cannot use our EMS yet in the European Union. So what we are doing is that we are transferring this knowledge, this know-how, this AI innovation that we have developed to optimize our batteries and to give a high return on investment in terms of trading and optimizing the maximum ability of our batteries and the predictive maintenance, of all the software side. So this is a bit the challenge that we are tackling at the moment. And hopefully in a few months, our software side will be able to be integrated in the European Union.
Excellent. So optimizing the revenue is one of the perspective. On the other way, every business has to keep their costs competitive, right? So I think this would be the part that World First can help on as well. Because energy tech, they are sourcing supply chain components directly over the road, particularly some of them they source from local Chinese facilities as well. So I understand that you have a platform called 1688 that basically to keep the cost in a competitive ways. Can you share a little bit more on that platform? And in particular, how does this World First integrated payment solutions can empower international players like them?
Yeah, so 1688 is an amazing platform which enables people all over the world to be able to source directly from suppliers and factories in China. I mean, this is a trend we've seen going on for a really long time, especially in the green space, where businesses have stopped using in the UK expensive European distributors to acquire their stuff from Asia. It's stopped being that way now. They've tried finding different ways to connect directly with the suppliers and connect directly with the factories in China. Very easily save 15 to 25% on the purchase cost. Within this space, that is the difference between winning a bid and not. That's the difference between succeeding and not. So that change has been going on for a really long time now.
Very easy to save 15 to 20%.
Yeah, but it's going directly to the factory versus using
Wow.
distributors and intermediaries. So that's been going on for a while. It's not always an easy thing. As a foreigner trying to enter that market, like it is not as easy as just turning up and saying, I would like to deal with a factory. It can be complicated. I've actually seen the market evolve even further. And I say this as recently as last weekend when I was in Wimbledon, and there was a stand in the center of Wimbledon from a Chinese solar supplier who was trying to sell directly to the consumer in the center of Wimbledon with flyers from the factory solar. So it's going even further now. It's going even further. But typically the cutting out the middleman has already been going on for a long time. But like I said, it's not a simple thing. It's not as easy as turning up. Even if you find somebody that is able to supply you at the price you want, you've then got a bunch of new problems because you've then got a relationship with someone you don't really know, maybe can't communicate with very easily, don't necessarily trust. They want to get paid in a currency you don't have, and they want to get paid all up front. And so this creates a bunch of problems for people. And I think this is where financial services may not be the first thing you think of when you think about how you can power your supply chain or source from China, but it is really critical. And it's critical to have somebody, I guess, fine, we can help with a lot of those things, but somebody who knows both sides. Like I said, trust is a huge part here. Are you paying a ghost entity at the other side, or is it actually a business that's being KYB'd? The person that you're helping to move those funds actually knows both sides. Again, because we're part of Ant International and we know basically every business in mainland China, we're able to make sure the money gets there free and fast and so on. But if you just send it by your bank, you don't necessarily know where you're sending it. So that 15% saving might actually be incredibly expensive depending on how you go about doing this.
Yes, definitely. You would like to add on something? I see you hold up the mic. Okay. Lawrence, I would like to dive a little bit deeper, particularly on your part, because you will be very important for green tech firms in terms of the projects and also capital deployments. So my follow-up questions to you is because you play suppliers upfront, right? And every project, like Michelle's projects they're going to deploy, is massive. As you mentioned about, the upfront cost is so big. So it's not easy in terms of capital deployment. And also usually the consumer, they get paid by days later, right? So how can companies bridge this gap without giving up their entity or shares?
I mean, it's really hard. There's no perfect answer, but you're right that it's such a huge thing. I mean, there's no business. This could be a conversation about any industry, and people will complain about cash flow. It's always a thing. I think it's especially a thing within green tech, just because the supplier has got a lot of negotiating power. They're going to want all the money up front. There's a lead time to ship. There's a lead time to build. There's very much a lead time to get paid by whatever you're planning on doing with it. So there's a massive cash flow gap that's going to hold back whatever growth you have. So it is especially a problem within green tech. So people end up giving away equity in businesses way too early because they just need to be able to bridge that gap, not because they actually want to or it's providing any meaningful service to them. So it is a huge problem, especially in this industry, that either holds back growth or it forces founders into very difficult positions. So it's a space that we're trying to really step into and lean into, and very heavily driven by the needs of green tech. So to enable people to get access to fast, flexible funding based on their receivables, based on the cash flow, based on, money to come, rather than having to give away equity, rather than having to take out, term loans from banks, which might take weeks or months. And they'll, you'll be paying installment repayments the entire time you still haven't got the money. So there is no perfect solution, but a lot of the solutions in the market today are quite terrible. So it is a space we really want to lean into because it's really holding back the green tech space in the UK, especially, even more than it is other industries.
Yes. Yeah, indeed. I think we see a lot of similarity, and also particularly in the policy focus in green tech or clean tech, both London and or UK as well as Hong Kong. They are giving a lot of resources and also policy signal in terms of their energy transitions. Not to mention about European countries. Basically, all of the countries they are tagging along the line as well. So there would be a lot of synergies, and also it would bring a lot of international investors for investing in projects or investing in companies. So my questions to our panelists, particularly to Jason, Michelle, and also Zoe, is given that it is one of the biggest waves, in terms of scouting for opportunities to invest, scouting for good projects to gain, profit or revenue, scouting for good portfolio that can make you rich in the upcoming 5 to 10 years. So from a commercial perspective, how does utilizing Hong Kong as your international springboard can help your companies to streamline your global supply chain and build strong, as well as bankable relationship with international asset owner, or from your perspective, obviously it's for the investors relationship. So can I start with Michelle and then Zoe and then get back to Jason?
Yes, thank you so much. This is extremely important for us. Us being in Hong Kong and going in the IPO has made us do a pivot from being a typical manufacturing company to now an end-to-end solution where we can provide financing for our projects. Because financing is a big part of most of the best projects, I think, around the world, not only in Europe. And it makes us different to come out of the cat game and say we are just competing with prices and with all the competition of manufacturing plants, of factories out there. So we stand out as being an end-to-end solution, and we can see the traction being so strong in the market, where we're working directly with developers, we're working directly with it can be project owners and data centers and the grid, because we are able not only to bring the hardware but also to bring the finances as well. We will be able to capitalize it from the Hong Kong region. And this is extremely, extremely important for us. And because of that, it has enabled us to scale so fast. Just in 1 year alone, 2 weeks ago, we just delivered 150 megawatt in Hungary. We are working on a 900 megawatt project in UK right now, analyzing it for backup for grid and data center. The same in all of Europe, and in just one span of 1 year, because of our capitalism and our strength, that we're able to raise capital from Hong Kong and have that solid bankability background, is really positioning us very well in the European market and giving us ability to scale faster. And we are able to also look back and analyze the bankabilities and opportunities that we have in front of us and focus on all those markets that are bringing fruitfulness in the best market than just scrapping and taking anything that is available. So it positions us in the market as a high return on investment and capital strength to be able to accelerate projects.
I really like your point about a high return of the capital as well as projects. So Zoe, how do you think?
I like this question because based on our own experience in the past 4 years, we would like to identify our team as the bridge between China manufacturing and UK as well as wider EU-US partners. In this case, Hong Kong has been the bridge between us and our global partners. We have been using our Hong Kong entity as the representative entity for example, partnerships to sign contracts with our partners in the US, UK, Italy so far, for example. And now we're trying to scale. So back in this point, Hong Kong has been playing the bridge as the representative for our business. Apart from that, even our factory back in Shenzhen is also using Hong Kong as the hub for IPO planning, for example. So I just have to say Hong Kong is very important. I really like the fact that Hong Kong is open and flexible for all range of business, SMEs or big giant companies. I really like that fact, and our team is grateful for that as well, because Hong Kong offered us that flexibility at the beginning of our business back in 2022. For example, we were attending London EV show here at Excel 4 years ago. It was still COVID, so Hong Kong has been very helpful for our business. So yeah. Thank you.
Thank you for the direct pitch. So I'm circling back to Jason. I have to mention a point that I said investing in projects or a company make you rich, but in a way, perhaps it may also make you tears, right? So I just like to, understand from your perspective, no matter it's from the risk-taking perspective or, or long-term investment perspective, how do you think?
About Hong Kong,
Yeah.
the role, yeah. So I think the phrase super connector is a valid one in the sense that Hong Kong provides both access to capital and access to a market. And that's historically why London also develops access to capital and access to a wider market. It's not only those two things, because those things are very big today when markets are very volatile. There's liquidity is quite transient. Having access to those two things is quite critical. But also Hong Kong and London have been historically very blue chip institutional fundraising markets where you've got large stock markets, a lot of liquidity, professional regulation, the whole kind of ecosystem, lawyers, bankers, all the kind of the soft infrastructure that you need. And you don't have the issue of the phantom company that you might be teaching money to. you have a proper regulatory institutional framework there. And you're seeing that in this last wave over last year, where Hong Kong is playing quite a critical role in global capital markets for IPOing for a lot of companies. So I do think that blue chip institutional background that Hong Kong has, as well as all the soft infrastructure, combined with the access to markets and pools of capital, has been quite key. And I think the other point to make, particularly on the climate side, is a lot of investment pools are very kind of yield or infrastructure focused. Whereas at least in Hong Kong, there are pools of capital that are more risk-taking and willing to do kind of earlier stage things, probably more akin to kind of US markets than a lot of other markets out there. So you do have those buckets of capital, which are obviously quite scarce in other markets.
Yeah. So we are about the time to close the panel discussions. So I think to wrap up this panel, can you give us one sentence, in 1 or 2 sentences? What is the biggest opportunities for your firms in the upcoming UK, Hong Kong Green Corridor? Or in a bigger, perspective, you can consider, Hong Kong and the road Green Corridors. What kind of opportunities that you see? Can we this time start from Lawrence?
I'd say that probably the biggest opportunity for us in a sentence, and actually I think we're very well placed, about uniquely well placed to do it, is for World First and for us to act as the kind of invisible financial rail that enables the green tech businesses in the UK and in Hong Kong to trade and transact internationally as if they were domestically. That being able to do that and being able to make that work, for us, that's the huge opportunity, and that's really what we're trying to persist in the green tech market and more broadly.
Zoe?
Thank you. For us, we believe Hong Kong can provide us the biggest opportunity to expand our technology to wider regions, including EU, US, Asia, hopefully, especially based on our proven projects from the UK market in the past 4 years. Thank you.
Yeah, thank you.
Michelle?
I think Hong Kong for us definitely is a strong pillar that gives us a background of a solid innovation
Mhm.
for our AI technology and giving us as well a larger capacity of capital to accelerate our best project and accelerate the decarbonizations in Europe.
Okay.
Definitely.
Jason, give
So-
us a hit.
Yeah, so within our portfolio, as I mentioned, sustainable aviation fuel. So we're producing that from a obviously Hong Kong-based company. UK is the largest, fastest growing SAF market in Europe, and we've got a very material market share and a lot of great customers here. So continuing to build upon that.
Okay, thank you all. So I think today it makes it very clear that path to net zero requires cross-border collaboration in terms of technologies, also in terms of capital deployment, and Hong Kong provide a very ideal platform for financing, particularly for a legal and regulatory framework, which turn that our green ambitions into commercial reality. As Cheng mentions, our Invest Hong Kong team is joining us today. They are sitting with you, basically. So if you're interested to establish your business across the border from UK to Hong Kong, please come to us, and then we will be always here for you to support your business expansions. So thank you all again for our brilliant panelists for their important and very insightful sharing. And I hope you enjoy the rest of the afternoon. Thank you.
Thank you.